On June 12, 2026, Elon Musk became the richest human being who has ever lived. Not the richest person alive. The richest person, period. More wealth than any human in recorded history has ever held at one time. $1,100,000,000,000. But here is what almost nobody is talking about today. For separate times in the last 18 years, Elon Musk came within weeks, sometimes days, of losing it all. Not slowing down. Not a bad quarter. Total career-ending, company-collapsing failure. Twice in the same month in 2008. Once in 2018 by his own hand in a single tweet. And once in 2022 in a deal so widely mocked that financial journalists were writing his obituary as a businessman. This is not a story about luck. And it's not a simple story about genius either. This is a story about a man who has repeatedly stood at the edge, and the 4 moments that explain how he never went over it. Let's go back to where it almost ended the first time. By the end of 2008, Elon Musk had already made and spent one fortune. He'd sold Zip2 in 1999 for over $300 million, made roughly $22 million from it personally. He'd co-founded X.com, which became PayPal, and walked away from its 2002 sale to eBay with around $180 million. By any normal standard, that's a life-defining amount of money. A person could retire at 31 years old and never work again. Musk put almost all of it, reportedly over $100 million combined, into 2 companies that, on paper, made no sense, a rocket company and an electric car company. In 2008, electric cars were a punchline and private spaceflight was something only governments did. By the fall of 2008, both companies were dying at the same time. SpaceX had attempted 3 launches of its Falcon 1 rocket. All 3 had failed. Not partial failures, the rocket either didn't reach orbit or destroyed its payload. 3 strikes, and SpaceX was almost entirely out of money to attempt a 4th. Tesla, simultaneously, was burning through cash trying to get its first car, the Roadster, into production. The 2008 financial crisis had just hit. Credit markets were frozen. Tesla's planned funding round, which the company desperately needed to survive, was at serious risk of falling apart entirely as investors pulled back from anything resembling a risky bet. Musk has said publicly that by late 2008, he was personally down to his last tens of millions and putting nearly all of it into keeping both companies alive simultaneously. He was, by his own description, functionally broke by the standards of a man who had been worth hundreds of millions just a few years earlier. On September 28, 2008, SpaceX launched Falcon 1 for the 4th time. It reached orbit, the first privately funded liquid fuel rocket in history to do so. Weeks later, in December 2008, Tesla closed a $40 million funding round, reportedly finalized on Christmas Eve, with hours to spare before the company would have run out of money entirely. 2 companies, same month, both saved by margins that, in hindsight, look almost impossibly thin. If Falcon 1's 4th launch had failed, if Tesla's funding round had collapsed a few days earlier, there's a very real version of history where Elon Musk is remembered today as a cautionary tale. The PayPal guy who blew his fortune on 2 doomed companies. Instead, both companies survived. And 18 years later, those 2 companies would become the foundation of a $1 trillion fortune. But that wasn't the last time it almost ended. By 2018, Tesla had survived its near-death in 2008 and grown into the most valuable car company by some measures, but was also, again, in serious trouble. Tesla was in what insiders called production hell, struggling badly to manufacture the Model 3 at the volume Musk had promised investors. The company was burning cash at a rate that had short sellers betting heavily against it, with some of the largest short positions against any public company in America. Musk was under enormous pressure. Tesla stock was being hammered by analysts questioning whether the company would survive long enough to become profitable. On August 7, 2018, Musk posted on Twitter that he was considering taking Tesla private at $420 per share, and that funding was secured. The stock spiked immediately. Trading was halted. Then it became clear funding was not secured. There was no firm financing in place. The U.S. Securities and Exchange Commission sued Musk for securities fraud, alleging that the tweet was false and materially misleading to investors, and that it caused significant market disruption. This was not a vague allegation. This was the federal government accusing the CEO of a major public company of fraud, in writing, with the potential to bar him from serving as an officer or director of any public company, which would have meant being forced out of Tesla entirely. For a period of weeks, the man who had built Tesla faced a real possibility of being legally removed from it. The turn. Musk settled with the SEC in late September 2018, without admitting or denying the fraud allegations, but agreeing to step down as Tesla's chairman for at least 3 years and paying a $20 million fine. Tesla itself paid a separate $20 million fine. It was a serious blow, reputationally, and to Musk's direct control over the company's board. But it was survivable. He remained CEO. Tesla kept building cars. And critically, the underlying production problems that had created the pressure in the first place, the Model 3 manufacturing crisis, were genuinely being solved around this same period. Tesla turned its first profitable quarter not long after. The settlement let Musk keep running the company. And the company, despite the chaos at the top, was about to enter the most explosive growth period in its history. Tesla's stock would increase by over 1,000% in the following 2 years. But the next crisis wouldn't be about a tweet causing a problem. It would be about an entire company, purchased in a fit of momentum, nearly becoming the problem itself. In April 2022, Musk made an unsolicited offer to buy Twitter for $44 billion, a roughly 38% premium over the stock's trading price at the time. To fund it, Musk sold tens of billions of dollars worth of Tesla stock and took on significant margin loans secured against his remaining Tesla shares, meaning Tesla's stock price was now directly tied to his ability to service the debt from the Twitter deal. This single decision linked the fate of two massive, previously unrelated companies together. If Tesla's stock fell far enough, Musk could face margin calls that would force him to sell even more Tesla stock, creating a downward spiral. After the deal closed in October 2022, things deteriorated quickly and publicly. Major advertisers, the overwhelming majority of Twitter's revenue, paused or pulled spending amid concerns over content moderation changes and brand safety. Twitter's revenue reportedly dropped by as much as 50% in some months compared to the prior year. Musk laid off the large majority of Twitter's workforce within weeks. The company was carrying roughly $13 billion in debt from the buyout, debt that needed to be serviced by a business whose revenue was actively collapsing. Meanwhile, Tesla's stock price fell dramatically through late 2022, losing roughly 2/3 of its value from its peak. Investors openly blamed Musk's distraction with Twitter, his continued stock sales to fund it, and reputational damage to the Tesla brand from his increasingly controversial public behavior on the platform he now owned. By the end of 2022, financial commentators were writing headlines describing it as one of the worst trades in financial history. Musk had reportedly lost more personal net worth in 2022 than any individual in recorded history up to that point, driven primarily by the Tesla stock decline. For a brief window, it looked like the Twitter acquisition might not just fail on its own terms, it might drag Tesla down with it, threatening the company that had taken 2 near deaths to build. The turn. Twitter was restructured, heavily cut, and eventually rebranded to X, folded in 2025 into a combined corporate structure with xAI, Musk's artificial intelligence company, in a deal that gave the AI venture access to X's data and user base. Tesla's stock recovered through 2023 and 2024 as the company's core business, vehicle deliveries, energy storage, and increasingly, its self-driving and robotics ambitions reasserted itself in investor sentiment. And critically, SpaceX, the company that nearly died in 2008, had spent the years since quietly becoming the dominant force in commercial spaceflight. Starlink had grown to millions of subscribers. The Falcon 9 had become the most launched orbital rocket in history. By 2025, SpaceX's private valuation had climbed toward $800 billion, making it, by some measures, more valuable than most public companies on Earth, while still being privately held. Which sets up the moment everything converged. In June 2026, SpaceX did something it had never done in its 24-year history. It went public. The IPO priced at $135 per share, valuing SpaceX at approximately $1.77 trillion, raising up to $75 billion in a single offering, making it the largest IPO in history by a wide margin. Musk's ownership stake in SpaceX, reportedly around 43%, was suddenly worth over $760 billion on its own. Combined with his Tesla holdings, his stake in xAI, and his other ventures, his total net worth crossed $1 trillion, an estimated $1.1 trillion, according to Forbes and Reuters calculations. The company that nearly ran out of money after 3 consecutive rocket failures in 2008, the company Musk poured the last of his PayPal fortune into weeks before it would have folded, is now worth more than the GDP of most countries on Earth. For times, the empire was on the edge. 3 rocket failures and a funding round that closed on Christmas Eve. A tweet that triggered a federal fraud investigation. A $44 billion acquisition that nearly took down his other company with it. And each time, it didn't collapse. It compounded. There's a version of this story that's simply about wealth. About a number with 12 zeros. But the more interesting version is about risk, about a pattern of decisions that, for separate times, could have ended everything, and didn't. Whether that pattern is sustainable forever is a different question. Every empire that has ever existed eventually meets the time the pattern doesn't hold. The question this story leaves you with isn't whether Elon Musk got lucky 4 times. It's whether anyone can keep playing at this level of risk indefinitely, and what the 5th time might look like. If you found this useful, subscribe. We cover the stories and the empires that the headlines move past too quickly. See you in the next one.